Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, June 30th, 2009. Well, we're seeing a nice little dip on Wall Street today, and again, we sold off after our fake breakout this morning, and I'm going to discuss why you knew it was a fake breakout, or what you could do based off of that fake breakout once you realized it was one. This is really the bottom line of trading. There are so many situations in the market where the market fools you one way or the other, and it's all about who can recover fastest and who sees it first. Those are the individuals, those are the traders that are going to make the most money, and that's exactly what you had to do today. And it was a beautifully done job today by traders in the Money Stocks chat room, talking about it as it started to cascade down, each level being a good scalping level for a quick scalp and so forth on the way down. Now, what we're looking at here is the intraday 10-minute chart of the SPY. Really a great chart telling us the rollover that happened today, where we took out all of yesterday's gains and are really trading right at the lows from yesterday. And that's a good example of starting why you knew this was a good level. And take a look at yesterday. Here's your low of the day yesterday. See the tails on these two candles before you ripped up to about the 92.75 level, which was on one of our key levels we highlighted. And you can see that same level is the same level you paused on right here, got a little bit of a bounce, and then you broke through it, and then dropped all the way down to our next mega level, right around 91.35 to 91.40, which also coincides to the 200 moving average. And right off of that is where you get this little bit of a bearish flag pattern. And yes, this is an in spirit of bear flag pattern starting here with the 20 moving average sloping into current price. So again, watch this level very closely. There should be some good heavy resistance right here, especially with the pattern that's developed. Okay, now let's start with what happened today. Why are we seeing downside in the markets? Because, I mean, that's really bottom line, what we want to know. You know, today is the 3 days before the July 4th Friday is closed. You have Tuesday today, then Wednesday, then Thursday. Markets are closed on Friday. You know it's going to be light volume. That's exactly what you're seeing now. You've seen the market just float up on light volume after the hard selling took place. Now, this hard selling started right around 10 o'clock. Now, most of the pundits out there, most of the media are going to focus on the consumer confidence, but it was not the consumer confidence really that caused the market to roll over. Because I'll tell you this, if the consumer confidence hadn't caused oil to weaken just a little bit, this market would still be up near the highs of the day. That's the bottom line. You know, was the consumer confidence ugly today? Yes, it was. No doubt about it. But that was not the cause of the rollover. This was the cause of the rollover, and I'm going to show you right now. This drop right here on oil was the absolute cause of the rollover. There's no questions asked, no chance about anything else being it. This is what caused it today. All right, now it's also a matter of the dollar. Here's the UUP, the dollar index. Look at the spike on the dollar index. Now it's come off, and you can see the market kind of moderating as it's come off those highs. So it's a kind of a perfect storm, if you will, and I'm going to call it that perfect storm because you had consumer confidence, which initially punctured a hole in oil. Why? Because if consumers are really not that confident, then demand is not going to be there. If demand's not there for, you know, commodities, you're going to have a drop in oil. All right, remember, this run on oil has partly been because of the dollar weakening, but it's also been because of demand. Everyone thinks demand's going to rush back. Well, today a good example that it's not happening. And as soon as you saw that, you had the drop in oil based off of that consumer confidence and the demand issue. So oil starts to drop for that reason. In addition, you have the UUP, which is charting right here, which is showing us the dollar, and the dollar starts to spike up. So that's what I mean by a perfect storm in this situation, where you have the dollar rallying, the demand issue for oil becoming weaker, so the oil's going to fall even faster, and that's really what caused the USO, which is the ETF for oil, to drop like this, dropping like a rock. Now remember, it's not really that oil's dropping, it's more how oil drops, the drop in oil affects the overall stocks, like ExxonMobil. And look at Exxon, folks. Exxon getting crushed here all the way back down, then bouncing up. Look at that, how it basically mirrors the market. This is exactly what the market looks like right now. You see this little curvature up, and the bearish pattern in spirit of bear flag. Look at the spiders. Same type of pattern there, exactly. So that's precisely what you've seen in this market, and a good indicator of what's been going on. And I just wanted to show you that perfect storm situation, how you had a consumer confidence number that really in and of itself doesn't tell us much. It's more of the demand issue in the underlying number that's telling us something bad, and then that's what caused oil to drop, or at least start to drop. The addition of the dollar causes the oil to drop even faster and harder. That causes Exxon to drop, and when Exxon drops, we all know the market's going to get punished, and that's what had happened. Now, again, we have a lot of numbers economically over the next 3 days to watch. Remember, the big number is the jobs number, the unemployment number on Thursday with initial claims also. That's going to be very, very big for this market. Now, it's interesting that they put that off. Usually that number goes out in the markets right around the week after. Whenever Friday's closed and the unemployment number usually comes out on Friday, they push it off to the week after. It's very interesting that they pushed it to this week, and I dare say that if the market, it's partially a volume issue. Remember, you usually push off the unemployment number because the volume will be in there next week, and therefore, if it's a good number, it'll go much further. The negative to that is if it's a bad number, you keep it on the current week, and then maybe we see if the market, because it's light volume, can be propped up much easier. And that's what I think you're seeing here this afternoon, folks, at least initially. You can see volume is just dead now, and that's making it very easy for the market to really not dump out again, even off of this bearish flag pattern. You know, you are selling off a little bit here, but it's so minor because there's no volume behind it that you're not going to get the same amount of drop. I think possibly you could go test double bottom here, 200 moving average again, but I don't really anticipate, to be honest, any further downside in the market today but below this double bottom area. And you might say, well, why is that? And I would just say because there's no volume behind it. All right, anyone that wants to prop this market up can be doing it very, very simply with the light volume in this market this afternoon, and I would not be shocked to see that happen, okay? So please understand that that's a major issue, and a lot of people will just kind of gloss over it. They think, oh, it can't happen, it's not happening. It's absolutely happening. Propping is number one out there, without a doubt, on light volume days. You will see it 100%. Even on heavy volume days, if the market's scary enough, they'll prop it. So the fact that the unemployment numbers getting pushed up here to a day earlier instead of a week later tells me that there may be an issue here on that unemployment number where it's not going to come out that rosy, and they want to make sure the markets don't drop that much, because remember, everyone's leaving midweek, Thursday, half day. They're all going to jet out. I'll probably even be jetting out early to take a vacation here. The volume's just not going to be there. The trading environment's not going to be great, most likely. The mornings, yes, trading has been great in the mornings. Continues to be. Look at yesterday. And then look by 10:30, 11 o'clock, what happened. Today, right into about 11:30, and then look at what's happening. That's my point. So really, late in the day, you're having no volume in this market. Very easy to prop it up. Very easy to give a buy program to Goldman Sachs or ExxonMobil and have it just float up like that, which keeps the markets afloat and really from dumping out big. So believe it or not, if you had heavy volume in this market today, it's very possible you'd see a down day of 300 points off of what we've seen. A $2 drop in oil, consumer confidence, ugly number. You know, we've had that Case-Shiller index this morning for housing prices was not pretty either. It was actually a very, very ugly number. But bottom line, it doesn't really matter because that's not enough volume. So it's interesting to note that if you had volume in this market, if you had full participation, you may be seeing a little more drop, but because of the volume, you're holding up the markets. Now again, our levels here on the charts, guys, you see, initially we moved higher and then we started to sell off. You had a beautiful test of our dotted trend line here, even number play. Even number play is one of our favorite plays in the chat room. Worked out again today. And again, I explained that in the nightly video as part of the research center as well. You can see pierce of that and then sell. Possible topping tail right there too. Sure enough, drops off the charts here on the major drop. And each level, notice our master level right here at 92.40 to 50. You get a little tail there, you get a bounce. Then it breaks down. Where do we go? Our next master level here at 91.50, 91.60, right in this area. All right, beautiful little bounce right in that area. Then we break down to our next one, which is also a 200. That's where you get a bounce. In the chat room, we did a scalp play right here off the 200 and right off of this level, and beautiful little moves off and on right around that area. So nice job on various plays there. So nonetheless, folks, my point again is just be cautious, understand the type of environment you're in, understand the whippy early morning action and then the quiet afternoon action in general this week going into next week. Now, I strongly encourage you we have some key pivot points coming up in the next week to join the Research Center. Check it out. This is the time to do it because after this week, we're going to be talking about some possible major moves in this market that you need to be appraised of. In addition, Hot Charts and Alerts, our new featured portion of the Research Center. Again, it's added in for free. Everything in that Research Center is included, which makes it fantastic. Technical tactics, hidden gems. The hidden gems yesterday, first day I posted it, ran 25% in one day. It's actually looking attractive again towards these levels, and we'll be watching that very closely and see where it heads over the next few days to next few weeks, as the hidden gems have just been on fire lately. In addition, the nightly videos I do personally, that's more geared towards the longer-term investor, swing trader, and even a little day trading, but more so the swing trader. Those are 30 plus minutes. Yesterday's was 37 minutes long of hardcore technicals, discussion on trends, and all that kind of good stuff that really going to guide you and teach you, educate. We explain. That's the bottom line. I want to explain everything to our participants and our premium subscribers so they can fully understand what to do and do it for themselves on all their other charts. That's the bottom line. All right, great stuff in there. Come join. In addition, the chat room is always a top-of-the-line subscription service. You can see video and everything there. All right, folks, enough of me talking about the services there. We hope you come and join. Enjoy your holiday weekend coming up, and we'll talk to you soon.